following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really to comment on the fact that I'm really enjoying the new format with you being there when the market's still open. You've assembled a great group of people. They're all great technicians. I'm just so glad that I first caught you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Be yourself around others. The biggest assumption that humans make is that everyone sees life the way we do. We assume that others think the way we think, feel the way we feel, judge the way we judge, and abuse the way we abuse. We are afraid to be ourselves around others because we think others will judge us, victimize us, abuse us, and blame us as we do ourselves. Market-wise, let's take a look at it out here. We have the Dow Industrials down 4, NASDAQ down 4, S&P's flat. Gold contract up $1.30, trading at $12.81 an ounce. Silver up 3 cents, $17.56 an ounce. Platinum flat at $9.54 an ounce. You get copper off a penny at $2.56 a pound. Light sweet crude down 32 cents, $47.37 a barrel. Notes, 10-year note down 6 ticks, 126.22. 30-year bond off a half a point or 16 ticks, 155.21. King dollar up 80 ticks, 96.750. The euro is trading at 112 to the U.S. dollar. The yen is at 110.5 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We got the first week of summer trading, and it is about as flat as you can get, folks. You get the VIX running at 9.69. Complacency is out here in spades, no two ways about it. When we talk about price spread out here, this is pretty amazing when you're talking about the S&P. So the high to the low in the S&P today is 24.33 to 24.39. That being said, the 33 number got hit before the market actually opened. It got hit at 9:40. Bottom line is that we've been in about a 1.5 range just about all day, from the price point of the low being the 34.26 and that high being 34.39. And the way that the VIX is running out here, it looks like that's exactly where this thing wants to stay coming into the close. Volume-wise, it's anemic. You can expect that on Mondays and Fridays right now. Tuesday, Wednesday, and Thursday, that's when you can expect some action in this marketplace. Friday, we got to a high in the S&P. The SPY, 244.35. Bottom line, 244.10. Sideways move. Dow Industrials, same type of setup inside the Dow. The Dow right now is trading, I believe, at highs. Yeah, we're 21,198. We hit the 21,224 mark. Anything over the 21,169, that was the March 1st high. I took it out. Bottom line, you can go higher. NDX 100 composite, same setup. They've been on their own for quite a while right now. The composite reached another new high out here today. 63.10, 63.08 was the high on Friday. NDX 100, we take a look at the NDX. NDX also reached another new high. The high of Friday was 58.81. 58.88 got tagged out there today. Gold contract. What do we have with gold? Gold contract. GCQ. Gold contract trading up $1.50. We've done 131,000 contracts. Bottom line, that's going to need more contract volume. You know, you're over the highs. Bottom line, Friday, big day. You had the volume, you had the price, you had all of it. $1,330. That's your swing high from April 17th. That's what it looks like it's going for. The thing that's kind of intriguing out here is that it hit 1286 flat. Well, 1286.80 is the low of that high. Silver. What do we have with the silver contract? Silver contract. The difference between gold and silver right now, folks, is this, is that the silver contract did take out its B point on Friday with volume. We had, it's a $1.24 A to B structure. That's going to bring it up into about the 1806 area when we have the high out there at 1872. Friday, you did 104,000 contracts. You're taking out the 75,000 contract level. Notes and bonds, bottom line, something is hanging out here, and it's hanging pretty good, folks. You had the notes take out the B point with volume on Friday. The bonds take it out. The notes right now are backing down with light volume. You're back down with 701,000 contracts. That's after taking out the B point. I believe we had 1.5 million contracts. Yeah, 1.5 million on Friday. So we're at 126.14, 128 is game inside the 10-year. The 30-year, you get a monster on your hands here. 30-year, you're at 154.12. That 30-year also took out the B point with velocity, wide price spread, everything. 323,000 contracts. That baby is on to make a run, confirmed ABC structure up until the 158 area. Right now, your 10-year yield is at 2.18, and 2.18 is at the lower end of the last 6 months, as 2.159 is actually the low. So bottom line, you get some low prices out here. Low yield, high prices. King dollar. King dollar, bottom line, folks, can't handle higher price. This is going to be pretty amazing watching this whole thing shake out. The reason is that most times, folks, you're going to get at least a small counter trend bounce. King dollar just refuses to bounce at all. You know, last 3 weeks, we went from we had hit 96,700 May 22nd. Took about 5 days to bounce up to 97,700, which is 1 penny, but it gave it up that day and ended up closing at 97,145. That being said, guess what? The 96,700, right where we are right now, we're at 96,770. That's your break downtown. And you did it on Friday. It looks like this is just setting up a larger ABC structure on the way down. And what you have out here in good old King dollar is that 95 is game. That's on the shorter term basis. On the longer term, meaning a few months, the 91 to 92 is game inside the dollar index. And if we don't hold that 91 to 92, that is where we've been consolidating since March, and you can actually make the case since January of 2015. Okay, so it's a long number. Bottom line, we hold it, then we'll go back up to the top. But we don't hold it. See ya. Don't want to be ya. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Dow's down 6, Nasdaq's off 3, S&P's the flat. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 13. You get the Nasdaq off 6. S&Ps are off $1.25. That is 1.25, folks. Now, let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. Don't forget, folks, Steve got a great show here every trading day, 1 to 2 Eastern Standard Time. Get it right on your cell phone. Go to TFNN.com, hit Tiger TV. Now, as you're over at TFNN, folks, you also can test drive Steve's newsletter, Mastering Probability. The way you do that, you're at TFNN, you hit newsletters, hit trading newsletters, test drive Mastering Probability 1 month absolutely free. Steve Rhodes, what's going on?
Well, let's see if we can liven up this very narrow trading range day out here.
I'll tell you, man, it's about as narrow as you can get, no doubt.
Yeah, pretty quiet everywhere. So, Tom, a month ago or so, we talked about the repatriation of funds that potentially could come back here to the U.S. So I thought we'd touch on that today for our viewers out there. And the little presentation I put together today is really it's for everybody, most certainly. But the 70% of the folks that listen to us with regard to those that are managing their retirement accounts and trying to take a look at a long-term picture. And so we've seen this repatriation playbook before. The most recent time was back in 2004. And you and I just briefly talked about it. This chart here is of the S&P 500. It's a weekly chart.
Okay.
And it certainly shows coming off of the bottom in 2003. And the act that was signed into legislation was referred to as the American Jobs Creation Act. It really didn't create a whole heck of a lot of jobs, but one of the things that was involved with it was the repatriation of funds back to U.S. companies. And at that stage, there was and it's estimated I know you sometimes look at the data from the St. Louis Fed or Fred out there. You take a look at that website. A lot of great information there. And so the estimation between them and the Federal Reserve is about $350 billion came back into the U.S. Now, that act was introduced in June of 2004, passed by the Senate in July of 2004, and then George Bush signed it into legislation in October 22nd, 2004. If we take a look at $350 billion, or at least the way that the S&P responded during that time period, is that it rose by 41%. Now, that actually took us into the 2007 top out there. Now, one of the interesting things is if you go back to the bottom in 2003, where at the last correction, if you will, was a 16% correction, and from that point up, you never saw your normal annual 1 year 10% correction. So for about 4.5 years, there were no what we'll call corrections, those being the ones where you see at least a 10% decline out there. So when I take a look at this here with regard to the way the market behaved, the way the S&P 500 behaved, and the repatriation of funds, which certainly had an impact in the market, this time around, what we're talking about is 7 times or 700% more in dollars overseas than that which was repatriated back to us in 2004. Because as of December 31st, 2016, it was very close to $2.5 trillion out there. Now, if you consider now the last correction that we had inside our market was in 2016, the February 2016 low, where we saw a 14% correction from high to low out there. Since then, we have seen very small retracements, a 6%, a 5%, and then most recently a 3% correction out here. And if the same thing unfolds, I don't know whether it will, but if the same thing unfolds, it says we could go to June 2020 without even seeing a 10% correction out there. Now, the interesting thing here is that we've seen this repatriation playbook before. And what's interesting, we're in an environment where the Fed is raising rates. How often, how quickly? We just know that we're in a raising rates environment structure. And the last time that we saw rates increase, and this time, and the last time they were raised basically at every meeting out there, was back in 2004. The Fed began raising rates in June of 2004, and didn't finish until June 30th of 2006 out there. But even during that time period, this red, the blue line on my chart here represents the S&P 500. And from the beginning of when the rates were going up to the last rate increase out there, the S&P 500 still was able to rise by 12% out there. This time, we're seeing a rate raise environment. So we've got repatriation, we've got a rate raising environment out here. And if I come back and I take a look at this monthly chart for the NASDAQ, and I'm going to focus more on the NASDAQ here for our listeners and our viewers out here. What we had between 2014 and 2016 was a consolidation. Now, the interesting thing, Tom, about that consolidation is it occurred between these horizontal trading ranges, or what Bud Rolfs used to call primary trading ranges. And this is just a software tool that I've developed for this system out here. But we had a clear consolidation between 39.24 and then 47.05. And as you know, once you break through a consolidation, you'll typically do a measured move equal to, whether it's to the upside or the downside, equal to or greater than that consolidation. Well, inside the NDX 100, it's greater than. We're already we came through one level. In essence, the real consolidation level would have projected about 5,500. We're well above that. We're in the 5,800 range. And in fact, this monthly chart here suggests to us that the NDX 100 is on its way up to 62.69 in that area. Doesn't tell us when, but says that we are headed up into that area. Now, I can also take a look at these horizontal trading ranges by month, which is a left-hand panel, by week, which is the center panel, and the daily. So there's some different targets depending on the style trader that one is out here. But it looks like 59.42 becomes our next target in that area for the NDX 100. And that's important and it's helpful because, you know, whenever you get above resistance, anything on the left-hand side of the chart, someplace where price has never been before, you have to use different tools to try to identify where price is likely headed to. Could be an A to B equals CD, could be a Fibonacci expansion. Horizontal trading ranges are another great tool for that. So here when we take a look at daily, weekly, monthly, it all suggests that again, longer term, not what's going to happen tomorrow or the next 10 minutes out here, that prices are going to head higher. And it fits right into this whole repatriation thing that we're seeing out here. Now, this chart here shows the NDX 100 and shows the long-term, the 20-year consolidation. Whether you want to call it a consolidation or where we had a test of a bottom, a double bottom, and then a test of a top, a double top, once you break through those, you have a measured move. So long term, I'm calling for the NDX 100 to head up into the 8,500. That is nothing more than just a measured move area of the NDX 100. As long as it stays above this red line, much like it did back here as the run up into the 2,000 highs out here, as long as price stays above that level, right now, folks, that's in the 5,500 range out here. This this forecast of price remains in effect. So there's a whole lot more to this. And subscribers inside of Mastering Probability, what we're going to be taking a look at is the individual stocks that are likely going to benefit the most from the repatriation of funds coming back here. And in many instances, it's not who you think it is. And IBM is one of those to take a look at out there.
When you say the 8,500, we talking like 16 years?
No, I don't think so. I think sooner than everyone believes.
Okay, now I was just curious because it took us 16 years to get back there.
Yeah, no. I think the repatriation is just going to go ahead and set things on fire, and then it's just off to the moon.
Stay right there. Stay right there. Steve and I are coming right back, folks. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien, we do appreciate you growling and prowling with us out here. Right now, we have the Dow down 5, Nasdaq's up 5, S&P's are flat. We are talking markets with our man, Mr. Steve Rhodes. And don't forget, folks, you can test drive his newsletter right now. The way you do that, you come over to TFNN, go to newsletters, go to Mastering Probability. You can test drive that 30 days absolutely free. So
let me give you kind of some simple math numbers here. if I go back so that you can kind of get a feel for where some of these price projections, how some of this stuff ties together. So if I just go back to the American Jobs Creation Act, the repatriation that brought back only $350 billion compared to 7 times as much right now.
Yes.
The S&P was able to rise by 41%. The NDX 100, I don't have it here, but it rose by 50%.
Okay.
But let's just go with the 40 to 50%. It doesn't really
Right.
matter. Let's just say that right now today we're priced around $6,000, 6,000 inside the NDX 100.
Yes.
You take 40% of that, that's 2,400. Add that to the 6, you get to 8,400 right there.
I got it.
So
okay.
yeah, so just and that's having an impact of 1/7 the type of impact that that American Jobs Act formed out there. So there's a number of different ways, and that's why I say sooner than later. That 40% increase back in 2004, even during rate increases, just took 2 years. So, a 2-year, and I don't want to get too caught up into the time projections, but I certainly have a way for us to go back and say, hey, what happened in the
the reason
past?
I had said that, because when you do take a consolidation out like that, say, okay, I understand the doubling, and yeah, you can do the time value, but I get what you're doing. So you're doing the time value as the aspect of that if the cash comes back and they basically buy their own stock back, there's less stock in the marketplace, and you're off to the races, right? Okay.
Yeah. And so that's a great point that you brought up, to buy your own stock back. Let's take a look at IBM as an example, which most people would say it's dead meat, it's a dead stock. You had Warren Buffett selling, I don't know how many shares, 30 million shares, whatever it might have been.
Yeah.
But if we take a look at this chart here, Tom, or this graph, I suppose, from 2007 to 2016 is a time period covered. And if we take a look at line number 2 of the dividends, you can see IBM's dividends going up per year fairly decently, from $1.50 back in 2007 to $5.50 as we speak right now. And you can see the increases per year. Here's what we know. IBM has been increasing their dividends each and every year out there. If I take a look at their shares, what we also know is they have been decreasing their shares each and every year. On I don't know what the average is, but around 5, 6%, 7%, something out there. Just like Apple, which has been reducing their shares by about 7% out there. What that provides, just that. This has nothing to do with their free cash flow, which is $68 billion plus overseas. Free cash flow per share out here continues to grow. They have the cash to go ahead and continue to increase dividends out there. And give it back to share and reduce. It doesn't matter whether they're reducing the shares or whether they're paying it back in dividends or a combination of the both out here. IBM, I'm just telling folks right now, IBM will be one of those companies that will not be dead meat, not at least as a shareholder is concerned. And if they get their sales operation, whether through acquisition of other companies or whatever it is that they do, that stock comes back into really play out here. And then that takes me back to the horizontal trading ranges, because this is a longer term, a bit of a longer term view.
Right.
Not and so I come back to take a look at those same kind of horizontal red lines. And I say, 145 is in play. I want to see what happens if price pulls back into that area. It should be a level of support out here. And then if I go ahead and I add some market profiles, it says we might be there right now. So trying to time this is important. And I'll go down and take a look at daily. What I'll be doing for subscribers to Mastering Probability. See, what I've done is I've taken all of the so I have exactly the 298 companies that make up the $2.4 trillion. And I've gone through each company's balance sheet to understand what are they doing in the case of dividends, what are they doing in buybacks, what are they doing what's their free cash flow look like, in order to be able to say, hey, we don't even have to do the NDX 100 or the S&P. We're going to go ahead and take the best of the best. And I've got them identified between what I'll call the A series, the B series, and the C series. Which ones are just the best of the best, which ones have a nice B grade, which ones are average, but will still benefit, so that investors will be able to create their own little portfolio. And it was interesting because there was a nice comment in the den. It just kind of worked into this, and that's talking about the valuation of Amazon. Well, Amazon doesn't have any significant cash overseas. They're not in the 298 companies out here. So Amazon will not benefit from a repatriation like companies like IBM and others might. And there's other companies that on the repatriation side that, aren't reducing shares, aren't increasing dividends, and not that they can't benefit, but I'm looking for which ones will have the biggest benefit back to the shareholders out here. So it's interesting, the time period that we're in. Just the nice thing about this, Tom, is that I did a workshop that was on everybody's members page that is a set of tools that help to identify every single major bear market top. And so it was present at the 2000 top. It was present at 2007. It's every single one. And if I take a look, Tom, where we're at right now, there's no bear sightings. And so that doesn't mean we're not going to have a decline, maybe 3%, a 5% decline. I'd love to see that because it just fits right into this idea and this narrative as to how to really benefit. So while I just think this is going to be one of the next biggest buying opportunity. Now, the only thing that throws us off, hey, if there's no tax legislation that gets passed, then yeah, this whole thing, this whole thing falls apart. But what's kind of interesting here, Tom, is this is just based on the repatriation. Take a look at the Federal Reserve was $3.5 trillion over a period of 4 or 5 years out here. This is 70% of that. Like, boom,
right.
And then not even considering what happens to all the corporations who might get another tax benefit, a reduced tax benefit. I don't know, is it 10%, 15%, 20%? It seems as if there's going to be corporate taxes that are going to be reduced out there. And I think that's also spurring on this lack of selling that we see inside the marketplace because people are wanting to lock in long-term gains out here. You'd like to do it at lower rates. I think it's one of the reasons why we saw such a robust first quarter type of increase in profits because so many companies went ahead and did everything they could to try to put as much expenses into 2016 and try to have that income come through in 2017. At this stage here, I'm sure they're still trying to play games until they can understand what goes on inside the market. It's one of the reasons why I believe Apple has gone up about 50% and why Warren Buffett is into Apple big time because he knows exactly what I know. He knows that everybody knows that Apple's got $215 billion. But what's interesting about Apple, I don't have the numbers here on my slides that I can show you in the case of Apple. I'll give you another one as an example, Gilead. And the cool thing here about Gilead Sciences is they've got $28 billion overseas, and they've just recently started paying out dividends. But their shares continue to decrease year over year lately. So these guys are on the cusp of, and they've got a lot of free cash flow per U.S. dollar out here, and it's had a nice retracement, maybe even more. Maybe if we see Gilead pull back into the $60, the $47 area. So this is the type of work that subscribers to Mastering Probability will get, all consolidated down so that they can make their decisions for their own portfolio.
And folks, you can come right over to our website at TFNN. You go to newsletters, go to Mastering Probability, test drive Steve's newsletter, Mastering Probability, 30 days, absolutely free. Steve, thanks so much. Have a great night, safe night. We look forward to the show tomorrow.
Thanks. Take care.
Thank you. Stay right there, folks. We're coming right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 13. Nasdaq's off 5. S&Ps are off 1.5. And, when we talk about volatility, man, it's about as flat as you can get. So this would be kind of interesting. So J.P. Morgan has a surprisingly simple theory for low volatility. So this just came across the tape. A slew of terrorist attacks in Europe, geopolitical strife from the Middle East to Asia, U.S. policy uncertainty. Investors have conjures up plenty of theories to make sense of this historic lows in the market volatility across asset classes, despite such strong headwinds, citing everything from soaring assets to passively managed vehicles to the rise of social media. To explain the tranquility, J.P. Morgan Chase, strategist led by Nicholas, I can't pronounce his last name. It's a good Greek name, though. That's what it looks like. Go back to the basics. The subdued measure are an accurate reflection of the economic and fundamental market fundamentals. They argue. Let me get this up. Okay. A very low supply of economic surprises currently is by itself enough to explain the low level of market volatility, the strategists write in a recent note to clients. Here's the argument. Volatility stages an uptick when market participants shift positions due to changes such as a release of economic data or central bank policy decision that alter the outlook for inflation and growth. The sensitivity to such surprises, in turn, is largely shaped by 2 factors. The extent to which positions are levered up meaning, if market players are awash with cash, they have the financial firepower to buy the market dip, and the cap price moves in either direction, and the propensity of investors is to trade. On all 3 fronts, tranquil market conditions are vindicated by economic and market fundamentals, according to the U.S. Bank, dispelling fears that historic lows and cross-asset volatility are indicative of investor complacency. The strategists look at the size of the revisions to global growth forecasts made by the bank's analysis as a proxy for macroeconomic surprises generally, and overlay this with implied market volatility levels across the rate, credit, equity, and currency and commodity markets. The results, economic surprises and volatility, move in a remarkable lockstep, according to the J.P. Morgan team. Given the market reaction to Brexit and more recently Donald Trump's unexpected presidential victory, perhaps investors have learned that it pays to resist overreacting to political developments, said Neil Duda, head of the U.S. economics at Renaissance Macro Research. Economic viability is as low as it has ever been. Why would market volatility be? Investors may have justly lulled to sleep by Investors may have been justly lulled to sleep by a stream of steady economic data. But there's one caveat. The buildup of leverage among individual U.S. investors has reached extreme levels amid the market calm, according to the J.P. Morgan's team. As a share of S&P's market capitalization, the amount of credit used to finance the purchase of stocks is approximately near record levels last seen in mid-2015, shortly before the unexpected Chinese devaluation of the yuan. A bevy of structural changes argue well for the low volatility environment to endure. J.P. Morgan team reckons, for instance, turnover in fixed income and equities is being dampened by the increased presence of central banks and the passive vehicles in those asset classes, which in turn weighs on volatility. What's more, the global financial system is awash with $5 trillion of excess cash, as measured by the difference between M2 money supply globally minus the implied demand target developed by the strategist. Equally important as a long-term depressant of market volatility is the persistently high amount of excess cash balances by non-bank investors globally, which in our opinion backstops both equities and bonds and reduces downside volatility. Yeah, well, I can absolutely see the amount of cash in the world. There's no doubt they're buying the dips, and I can see how that can keep things higher. And we look at our own yields right now. This is the whole bond deal, 2.17%. It's higher than almost every first world country. It is higher than every first world country in a huge way, too. Now, that being said, what you also have is that they seem to be suggesting that the volatility is going to stay like this. That isn't how it works, folks. The bottom line is that it stays until it doesn't. That's when it comes down to it. And when it doesn't, it basically explodes topside. Right now we are at 9.73. The low for today is 9.60. The low, if I bring this back, I get a 9.39 in December of 2006, before the thing was a few months later up at 21, then a few months later up at 37, and then about a year later up at 89. Bottom line is that we'll see how this whole thing shakes out. But what does happen, there's no doubt the amount of cash that's out there swishing around, yes, buy, sell. What downdrafts, when they start, and if they don't even have to get out of control. If you get a downdraft like 2 or 3 days, the correlation will be more intense because of the ETF structure, where the ETF structures have been helping the market in a dramatic way on the way up, because the amount of ETFs that have been produced inside the marketplace in the last 10 years are huge. That has changed how people, instead of buying funds, they're buying ETFs. Well, what ends up happening, more money goes into ETFs, guess what? It goes up. When that changes, and then there's a pullback from the ETF market, that's when the destruction is very quick and faster than most folks are used to. And the reason being, of course, is that that's where it's always, is it the chicken or is it the egg? If you sell the ETF, the sponsor of the ETF has to sell the stocks. You sell the stocks, sponsor has to sell the ETF. That's when the acceleration starts on the way down. So we'll see how this whole thing shakes out. We take a look at some of the higher volume stocks out here today. And what we have, let's see. So inside the S&P, it's going to be an extremely low volume day. But inside the S&P, hey, let's just go to Apple for a second. So Apple just came out with their competition for the Amazon Echo. Bottom line is that, needless to say, Apple basically wants a fortune for it. I believe the Echo is something like $79 of the dot. They're pushing up. I think what is it? $379. 349. It was in here somewhere. Can someone else put that in the down again for me? Bottom line is that let's see which software, and they're pushing this out at their software development conference. Now Apple's basically it's trading sideways. It's only down $1.60. But bottom line is that, like anything else, they're going to get big money for this device. You stay right there, folks. We're coming right back. Dow right now is down 14. Nasdaq's off 8. S&Ps are off $1.50. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Okay, so this new device that Apple's going to be coming up, they're calling it the HomePod. It is going to be a cost structure of $349. Now, that compares with $179 for the Amazon Echo Home Assistant and $110 for the Google Home. So they are at it again. Bottom line is that we'll see whether they can get that kind of money for it. What gets interesting here is that I suspect, I guess the cost out of that would be the speaker, and I suspect because they got such great music, their playlist, there's no doubt, they're going to make that a heck of a speaker because they're going to have to, because what does happen, folks, inside the Amazon product is that, the one that is at that $179, is the speaker. But guess what? The Dot, I believe, which is only about $49 or $59, does the exact same thing, and you hook that up to your speaker systems in your own house. So it's going to be pretty wild if, in fact, everyone starts laying out $349 for that speaker and that assistant. And I believe the way that they're talking about it right now, so I get this going on at the developers conference right at this particular point. Let's see. Okay, so they're pushing out a new 10.5-inch iPad Pro that supports a full-size smart keyboard. They're redesigning their app store. They got a new, faster iMac promoted as platinum for visual reality. Apple Pay is going to be coming to iMessenger for person-to-person payments. Siri gets a new voice and visual interface. Amazon Prime Video is coming to Apple TV this year. And Watch OS 4 will pull glucose data from Dexcom monitors. I'm not sure what that one is. Bottom line is that, yeah, and needless to say, I think most of those things do record everything that's going on in the house. So bottom line is, if you do have them on, that's a two-way recording. There's no two ways about that. Volume-wise out here, first day of summer trading, we're at 504 million right now in the NYSE, so that's going to come in maybe about 750 million on the NASDAQ composite, right where we're at 1.5. That can get to about 1.7. IWM, that IWM right now, that's trading 18 million contracts, 18 million shares. The Q's reaching a new high. Got to 13 million shares. This is pretty amazing. SPY did 28 million shares. That didn't get to a high. That was pushing into the high from yesterday with 88 million. Bottom line, though, what you do have Monday, Friday, in the summer, you can expect a little bit slower. What I do expect, the bottom line is that Tuesday, Wednesday, Thursday, we can expect some higher volatility out here. And I do expect that volatility, particularly, after reading that J.P. Morgan VIX, the analysis there, where I think that the complacency, no doubt, has been in the equity markets. But there hasn't been complacency in the commodity markets, nor has there been complacency inside the currency markets. The currency markets have moved, and they've moved quick. And I expect they're going to continue to move quick. And that in itself can throw markets basically up or down pretty quickly. Particularly, you talk about the yen and you talk about the Nikkei, bottom line, the correlation is just about as direct as you can get. Right now, the yen also hasn't moved out here today. We're still hanging at that 110.49. You stay right there, folks. We'll be coming back with some numbers. Dow Industrials down 21. NASDAQ is off 9. S&Ps are down 250. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best. Take action on your ideas. See, this is a great card. This is a great card from Monday for us, too. Doing your best means to take action. You have many great ideas in your head, but without action upon an idea, there'll be no manifestation, no results, and no reward. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow down 22, NASDAQ off 10, S&P's down 3. Summer trading in spades, low volume, sideways market, not much movement. Gold contract up $2, trading at $12.82 an ounce. We had silver up 4 cents, $17.56. Platinum flat at $9.54 an ounce. Copper down a penny and a half at $2.55 a pound. Light sweet crude down 27 cents, trading at $47.39 a barrel. Notes, 10-year note down 5 ticks, 126.23. 30-year bond off 16 ticks, 155.21. Now, both notes and bonds, folks, took out their B point on Friday with volume. You get confirmed ABC structures on the way up. That is saying higher price, lower yield in the 10 and in the 30. The 10's looking to run up to the 128 area. We're at 126.23. The 30's looking to get to 158, and we're at 155.23. The yield on the 10-year is at a 6-month low out here today at 2.175. King dollar. What do we have with King dollar? King dollar just can't catch a bid, folks. Bottom line, King dollar is trading at a price point of 96,745. We got to 96,930 today. Couldn't handle the price. Closes 96,745. Bottom line, 95 is coming at us. It's going to be pretty wild watching this whole thing shake out. So 95, when we take a look at this, that is the night of the election. And we pull this back, and you're going to see we've just done 100% retracement of the whole move. Election night, we hit 95.905, and then we took off like a rocket ship. Bottom line, it says, I don't want to stay low. I'm going to go higher. By that morning, we were at 98. Within 5 weeks, we were up to the 103 level, 103.81. That was January, the week of January 6th. What do? We give the whole thing up. Bottom line, we not only give it up, folks, but what we did, we gave that up in spades. It also broke the uptrend that had been in place, and we broke that uptrend with conviction. So what that says, it says 2 different things. It says, number one, the first thing we're going to go after is this 95,905. And, right now we're at 96,745. That being said, the bottom of this consolidation that we've been in since January of 2015, that's game. And that is the 92 to 91 area. And we'll see how we get down there, number one, and if, in fact, that market holds. It's held the last 4 times that we've been down there. The first time we were down there is May of 2015. Second time was August of 2015. Next was May of 2016. And then we had June of 2016. Other than that, bottom line, the lowest low then was up at the 94 level. So I expect that baby is going to get hit. We'll see if, in fact, it can hold. When we go take a look at the SPY out here today, what you get a sideways movement, you get low volume. That's expected on a Monday, particularly, you get the summer kicking off. We're going to be trading like this to about the second week of August, folks. Okay, so you have Fridays and Mondays, you can expect lower volume dramatically, plus low volatility. If we go take a look at the volume on the NYSE, we did 699 million. On the NASDAQ Composite, what we did out here is 1.7 billion. If you break this down and we go into the Qs, what you're going to see, Qs did 15 million, and they're at a new high. And that's after coming down, by the way, with 55 million. The SPY also, I think this went to a new high today. If it didn't, it's right next to it. Let's see. So it missed the new high by 5 cents. Bottom line, you had 244.35 on Friday, 244.30 today, 35 million shares versus the 88 million. We'll see how this baby shakes out tomorrow. The gold contract, what do we have with gold? The contract itself, bottom line, wants to get up and into this high that was generated out here in April. The low of that high is 1286.30. We hit 1286.80 rather. We hit the 1286 mark today. I expect what we're going to see, we're going to get up into this 1300 number, and we'll see if in fact it's going to go over that. The silver is in a confirmed ABC structure on the way up. That took out its B point, took it out on Friday, had the wide price spread, had the volume, all of the above. Silver's no doubt a trip. And this is a $1.20 A to B equals C to D. So it will bring it up somewhere up into the $18.20 area. The swing highs out here, 1860 and 1872. That's left over from February as well as April. And bottom line is that go right back to these bonds for a second, because when you see this 10-year, this 10-year is pretty amazing. So TYU, we're on the U contract. The U contract being the September contract, folks. So bonds out here, you back down today with 740,000 contracts versus taking the B point out on Friday. I believe it was 1.5 million. It was 1.5 million. Bottom line, higher prices are coming at us. Lower yields are coming at us. And that in itself is going to be good for the metals market. Some of the commodities out here today, we had unleaded gasoline down 2.3%. Lean hogs was off 1.8%. We had diesel down 1.5%. Crude was off 0.6%. Getting juice into it. Coffee was up 2.2%. Sugar was up 0.9%. Everything else was kind of flat. You had the cattle market going sideways after going a limit up a couple days last week. So the cattle market is laying right at its highs. 127.50 pound is at its highs. We're at 126.20 right now. Some of the higher volume stocks out here in this low volume market, this is what you had out here today. You had Advanced Micro up 34 cents. Apple, bottom line, folks, Apple has this developer conference that couldn't catch a bid, and their new device, the HomePod speaker, $349. So they're going to get some bread for that. We'll see how many millions they get to sell. You stay right there, folks. We'll come right back. Dow Industrials closed down 22, NASDAQ off 10, S&P's down 3. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. We had the Dow finish down 22. NASDAQ was off 10. S&P's down 3. Inside the Dow Industrials, strength versus the weakness out here. We had... Okay, so the leader out here today was Goldman Sachs. That was putting 4 positive points into the Dow. Walmart was putting 4. Exxon was putting 4. Taken away from it, Apple was the mover. Apple put 10 negative points in. Boeing put 8. United Technologies 7. McDonald's 6. Caterpillar 5. Inside the NDX 100, the strength versus the weakness out here. Strength was NVIDIA. That was up 3%. You had Tesla up 2.2%. Mattel was up 1%. Expedia is up 1%. Taken away from it, INCY, Insight Corporation, that thing got smoked. That's down 5.5%. You had Analog Devices off 2.6%. Seagate Technology down 2.6%. Let's go into Insight again for a second. Let's see what's going on with that baby. That thing is highly volatile. I see. It's certainly highly volatile. So that little baby got up, filled the gap, and then just gave it up in spades. That's a biopharma that is developing small molecule drugs primarily used in oncology. And they take in a lot of money, man, no doubt. $1.4 billion they plan on taking in this year. And that's a company that only took in $354 million in 2013. So pretty intense. We get over to some of the NDX monsters out here. You had Amazon up 461, trading at 1,011. Google, the voting shares, got over 1,000 also. Yeah, so the voting shares, which is GOOGL, traded up to 1,007 today. And the non-voting shares, when they split that, traded to 986. Right now, they're at 983. I expect why not both of them get up into those levels. Microsoft, that continued higher also. Microsoft up here, that was up 52 cents, $78.28. Now, that broke topside on Friday, and it had the volume behind the move. It's almost a small ABC up. It looks like that's finishing right up. 73 would be the small ABC structure on the way up. Right now we hit 72.89. The yes. We get over and we take a look at Starbucks. Starbucks is trading 64.27, and this, yeah, that baby's okay. So your high is $64. That's over the high that was generated out here on the 15th, of October 2015. Let me bring this up a little. Yeah, bottom line is that this is also up at those highs in a huge way. Let's go to Mike in Somerville. Hey, Mike, what's going on, brother?
Hey, I was just telling Al, I just can't stay away, I guess. I don't know. I didn't need my Tom O'Brien fix, I guess.
It's Hotel California, man.
But this time I got a real stock that I want, and I'm really interested in what you think. You steered me away from it before, Tom, and maybe you'll do it again. But just give me your scoop on it, buddy. What do you think?
Are we talking Under Armour?
Yeah, for some reason I want to own this thing. I don't know.
Let's take a look. So you get Under Armour. The low is 17. The high is 42. Your PE is 44. So this has been hammered with the rest of the retail stock. So, okay, so we've gone from 46 in April of 2016. Yeah, interesting. Okay, so I can see what you're looking at. I mean, what has happened here, folks, is this. What I believe he's looking at is this. Okay, so your last downdraft was February of this year. We go from 25 to 18, monster volume, 94 million. So we get 1802. We hit 1705, which is the week of the 24th of March. That's a rejection of lower price with lighter volume, so that's good. Then you got your sign of strength, the week of the 28th. You go from 17 to 20. Well, 20's game here. I guess the way that I'd trade this, Mike, the closer that you can get like to the bottom of that range, the better off you are. Either that or you're just going for it. You're putting a stop under like 18 and you're going for this 20, which is the spike high from the week of the 28th of April. Let me just see when they're...
All right, Tom, let me just ask you this. So you're a bear, so if I'm thinking about going long, just in general, you're pretty much going to deter me anyways, right?
No.
Okay.
Not, what happens is that when I'm reading these, just like that one, I mean, that looks like, that it tested its low, it had lighter volume, so that's a rejection. It did have the sign of strength, so that's saying, hey, it can go back to that level. Doesn't have to go higher than that level, but no, to answer your question, no, each one of these charts would be individual.
Right. Yeah, but Tom, in general, right, say I don't know where you're at, honestly, but I honestly think like this market's too high. So I'm kind of in the camp. Why would I go long in this market?
Well, in general, so to answer your question about being a bear, there's two different questions there. Will I put my money into this market outside of the gold and silver market? No. That's my personal deal, okay? I won't, that doesn't mean that it won't go up, though. You know what I'm saying?
So I'm thinking the same way as you. So, just like you said, just give me the famous saying: "Just sit on your hands." Go ahead, say it.
But you got this. You've been listening long enough, man. I've been bearish a long time, man. So I would have gave you that freaking same answer 2 years ago. So.
Yeah, but I'm still with you, buddy. So I'm still with you anyway.
It doesn't mean you don't make money. It just depends what you make money in. The market's a big deal. We've made plenty of money in the metals market. I'm not. It depends on where you are. That's all it comes down to.
All right. So let's just look at Under Armour again. Like, obviously, I think like it's a good company. I know I've listened to the fundamentals, and I love Under Armour, and everybody's wearing it. So. You're right. If the market does come down, then that's going to come down probably even more. So why even get in it?
Well, what happens is that you're paying $44 for one of earnings. That's big, 44 to 1. That's where the PE is. That's a good size PE. And,
all right.
They've been, let me just look at, because, up until lately, they were growing by leaps and bounds, too. Yeah, they're still growing. They're still growing. I mean, 2013, they did $2.3 billion. This year, they plan on doing $5.4 billion. Last year, 4.8. So they're still growing. They plan on doing $6.2 billion next year. So that's important. The growing aspect is important because that's one of the ways that you can get the PE down very quickly.
Right. All right. Thank
okay,
you,
brother.
Tom.
Have a great one, man. Have a safe one. You stay right there, folks. We'll come right back. Dow Industrials finished down 22. NASDAQ off 10. S&P's down 3.5. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had Microsoft up 52 cents. You had Amazon up 4.61. Exxon was up 62. Coke was up 10. If we go over and we take a look at Broadcom. So Broadcom got to a new high out here today, folks. We're going to look at this from one of the Tigers. It looks to me like you got Broadcom. This took out a B point of an ABC up. Your A point is, I'm just going to ballpark it at 209. Your B is out there at 241. So you got $32. Your C is 227. So 37.47, 55. You get the 255 would be the A to B equals C to D. You hit 256. Oh, interesting. You're 256.78 out here. I wouldn't be going short this right now, that's for sure. This has been a one-way trip. You'd have to, this would have to come down with some volume first. Let me see this. In order to run into lower price. And this is really a trip. Now, this company, I believe one company bought another. Avco Technologies bought Broadcom or vice versa. When you see these numbers, when they did this merger really threw in some numbers. So check it out. So Broadcom by itself was doing $2.5 billion in 2013. It looks like they combined the companies in 2016. That's when the revenues went from $6.9 billion to $13.3 billion. Bottom line, they're looking for $17.6 billion this year, $4.4 billion in the next quarter, and next year they're looking at $18.8 billion. What is intriguing here is look at these numbers. This is pretty wild. So when you want to see how China is growing, wow, this stock is all about China. In fact, this is pretty amazing, actually. We want to look at a few of these other semiconductors and see if this is happening. So their breakdown of revenue, out of the 2016 revenue of $13.3 million, more than half of it is out of China. $7.2 billion. Well, I guess that makes sense because that's where everything's getting made, right? Yeah, I got it. Okay. I'm going to pull a few more up and see that, though. But that would make sense because that's where the computers are actually getting made, so they must issue the sales out of there chip-wise. The rest of the world, $4.7 billion. The United States is only $1.1 billion. Malaysia is $250,000. Let me just see this again. Yeah, so that's what's going on. That's the aspect. Okay, they design, develop, supply semiconductors, integrated circuits. The company offers products such as broadband carrier access, cable, switches, network processors, wire connectors. The rest of that stuff, yeah, the integrated circuits has to be the big thing here. I want to pull up Intel for a second and see if they lay everything. I mean, I'm just curious as to whether they lay everything. Okay, so check this out. This is how this works, yeah. So I just pulled up Intel. And so what these companies would make sense. That's where everything's getting made in China. So the revenue, I just pulled up Intel's revenue. The 2016 revenue is $59 billion. More than half of that, also, they market it as Asia Pacific, $36.7 billion. Then America's $13 billion. They're almost scared to just put the U.S. on it. That's more than likely what's going on there. Let me see this. We're going to pull up a few more. Let's see, who else is in that? Qualcomm's in that space. Okay, so if we pull up Qualcomm and we see this, I can see how this makes sense because that's where everything's getting made. That's where they're going to price it out of. Oh, they don't break it down. Oh, that's because it's with Qualcomm, you're talking strictly license and technology. Yeah, that's what's going on. So yeah, they don't make anything. Qualcomm's got it made. Their revenue is a royalty revenue in a big way. So their CDMA technologies bring in $15.4 billion. Their licensing bring in $7.7 billion. Interesting. 877-927-6648. Let's go over and take a look at that XLK. The XLK new high out here today, 57.24. If we go into the XLE now. The XLE hasn't been able to catch a bid for 6 months. We're from 78 to 65. The two largest weighting structures inside there, you got ExxonMobil and you have Chevron. Neither one of them can also catch a bid. Exxon blew out its bottom of $80.30 last week, and by the way, did it with volume. Look at this, man. I got to pull this up again. This looks like a monster ABC down. If this is a monster ABC down, this is going to be big trouble. Let's see. So we get down, we get up, we get down. We do 54 million last week. Yeah, this is an ABC down. That's pretty intense. Okay, so your A point on this is 93. Your B is 80, so you get $13, which gets you $70. And right now we're at $80. $70 is game. And 70, the high of the low of 2015 was 75. The low is 66. Let's go see Chevron, CVX, if it's the same setup. Remember, when you're doing the volumes from last week, too, folks, you got to add in a day because of the holiday. Chevron did 22.9 million. That's going to be an ABC down, too. That's going to be enough. That's, wow. Okay, so your A point is 118. Your B is 106. You get $12, which is going to bring you down to 95. And 95, yeah, that would make sense. You know, this is where Chevron still would be stronger than Exxon. 95 would bring you down to 96.14, which was March of 2016. You know, now if we actually go over to the energy market, first we'll go into gasoline. Gasoline came down hard out here today. And so it's intriguing. Of course, we're at the beginning of the driving season, and yeah, you know, we're going to have plenty of gas, folks. And I suspect what's happening is that you know, what's amazing is that technology, some technology takes years, other technology takes less time, but when you come to the tipping point, it goes very quick. And we just may be at the tipping point right now with the aspect of how many between electric and gas vehicles are out there. The gas vehicles, of course, are around where we are. We live in Florida anyway. The gas vehicles are the big trash containers, all the city trucks, that's running on natural gas. The transit's running on natural gas. Retail-wise, cars, there's not a huge amount of them, but guess what? When you're actually going through these parking lots now, it seems that the ones that do have plug-ins, they're full, and they're full pretty much so. Because what you have here on this unleaded gas, so it's down 4 pennies today, 153.66. It comes down with volume. Now this is where this gets interesting because we know that summer is a light volume deal. Well, guess what? When you start coming down with volume and you're not expecting it, that's saying you're going much lower. I expect what you're going to see in this unleaded, we're going to go after this swing low of 145.43. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Dow finished down 22, NASDAQ off 10.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And we get over and we stay with this energy for a few more minutes here. So gasoline, 153 right now, unleaded 145 looks game. We get into the crude oil market. Now, that was down 0.7% today, or 32 cents. This also is having a hard time holding price. You were building some cars out here today. It looks like you're building cars for lower price, and you actually had some decent volume. Friday, we went south with 803,000 contracts. We did 694,000 contracts out here today. We hit a low of 46.86. Now, what that did, that got into the 47 level. The 47 level was the 5th of May, and that was a huge day, folks, because what had ended up happening, that the oil contract moved $3. We got down to 44.13. It rejected that price, took off like a rocket ship, closed out the day at 46.60, then did a nice bounce. That bounce, however, only took it to the downdraft from March 8th as well as the 19th. If we take this, I'm going to put this on a continuous contract, meaning the oil market. We bring this up. You lay this out a little, you're going to see that the 43.76 is the next level down. You know, you break that, and you know you're down at $40, man. And this is the same consolidation that we've been in, going all the way back to April of 2016. So just a little bit over a year, been in that same consolidation. It hasn't been able, each and every time it's up at that $52, can't handle it, runs down the other side, you know, kind of stops dead in its tracks. The last time it stopped dead in its tracks was 43.76. That was in May. You know, that being said, those are high volume lows, and they're going to be tested again. So you can expect some action down there. We have the Federal Reserve on the 14th. They're going to be, the probability is 90% that they're going to raise short-term rates. Now, when we say short-term rates, that's bank to bank. The rates certainly haven't been going up since January 1st. In fact, we're at the lowest we have been since January 1st. We're at 2.182 right now. That's a 6-month low. The actual low is 2.159. We take a look at the year, we're right about in the middle. 1.3 is the low, 2.6 is the high. Right now, we're at 2.18. So what we are going to have is that the 14th, so we're dealing with, we're dealing with the 5th today. So we're talking next Wednesday. That's going to be the Fed meeting. You know, and as I said, summer trading, Monday, Friday is going to be basically low volume. We'll see whether they get any volatility. What does happen is this. If you got a market that starts going south, in this particular case, even 15, 20 S&P points, which would be a monster move for the S&P right now, up or down, by the way, then you could get some volatility on a Friday. Other than that, bottom line, you're just going to see it Tuesday, Wednesday, Thursday, Monday, Friday will basically more than likely go sideways. We go into the XLF because what we have with the XLF, of course, is that's bank to bank. And the market has been saying that these rates are not going to be going up because these banks have not been able to get out of their way. Again, out here today, now this is a real bearish indication. We had the XLF go up to 2364. You closed at 2349. We did volume of 40 million shares versus Friday of 83 million versus what you're going into is 141 million, and you failed on price. So someone is selling that XLF right at that whole downdraft. And that's quite a downdraft because that was the March 21st downdraft. That's when we went from 2438 down into 2351. We take a look at JP Morgan. JP Morgan is at 82.79. And this here, yeah, this is an ABC down too. So this is pretty cool. Let me pull these back a little. Okay, so JP Morgan breaks downtown, 73 million shares. So we broke the B point. Look at this. Yeah, we got an ABC down. So your A point is 93, 98, almost 94 to 84. You get $10. So that's saying 79 is game. And JP Morgan, right now you're at 82.79. We go take a look at Goldman. Now, Goldman had led it. Goldman, bottom line, is a confirmed ABC structure down to the 202 level. And right now we're 213. We hit a 209.62 last week. So how we break down to the 202 level is going to be important. The reason being is that that's when Goldman took off topside on the election. It went from 178 to 205. We're retracing that, just about all of that right now. And what you do have inside of Goldman is that no doubt is a breakdown. You actually got back inside the lower range once you came back inside 218. So inside 218, guess what? then there's there's games at 205. That's the number. 205. You break 205, let's say, and you have to break it by a good 4 or 5 points. No, 5 points. 6, 7 points, actually. Then 178 is game on the other side. Because we went from 178 to 205 the week of the election. This is when all the equities took off. In particular, what took off like a rocket ship were the financials and the infrastructure stocks. If we go over to the infrastructure stocks, guess what, folks? There's going to be no infrastructure bill. This thing already got destroyed. This is where U.S. Steel went from $20 election going up to 41. Guess what, folks? We hit $20.15 today. That's saying, and we not only hit it, you broke down, and we broke down. The market kind of figured out the week of April 28th that there's not going to be an infrastructure bill. Bottom line, they're not going to make any money in the steel business. Guess what? This is doing another ABC structure on the way down. You're going to see U.S. Steel running at 1454 to 841. So it's pretty intense, some of these run-ups, how dramatic they actually got, and the type of move coming back. And the first one to, basically do the whole deal, which is ironic, was the peso. So the peso, folks, okay, Mexico is supposed to be the end of the world, build a wall and all this, okay? Bottom line, the peso started out at $18.16 to $1 US. The election goes to 21.38, goes all the way up to 22. Guess what? We're already back to 18.32. You're right back where it started from. In fact, the peso looks like it's going to get stronger. The thing that's wild about this whole deal, looking at the currencies, is that our dollar is going downtown. It's going south. The euro's going north, the yen is going north, meaning getting stronger. We're the ones that are getting weaker. You stay right there, folks. We'll be coming right back. Dow Industrials closed down 22. NASDAQ off 10. S&P's down 250. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And folks, if you want to see, inside the commodity business, how warped it can get, and right now this would be one of them. So Syngenta faces 7,000 Kansas farmers in a GMO corn dispute. So the farmers out in Kansas, folks, are suing Syngenta for $200 million in lost sales to China. But wait to hear how this shakes out. This is pretty amazing. Farmers have to deal with threats to their crops from nature all the time. Thousands of Kansas farmers, however, argue that Syngenta AG posed an even bigger threat by failing to prevent its genetically modified corn seed from contaminating U.S. crops, which led to a devastating rejection of imports by Chinese officials. More than 7,000 Kansas farmers are going to trial Monday, today, to convince a jury the agricultural giant rushed the genetically engineered seed to market before getting import approval from China, which then stopped shipments saying that the corn had been contaminated. That move and the farmers' inability to regain a foothold in China once other countries filled the void depressed corn prices for years, their suit claims. They're seeking $200 million in lost sales plus punitive damages. Syngenta, which denies any wrongdoing and says its GMO seed wasn't responsible for the price drops, almost went to trial over similar claims in April. The Minnesota court had to reschedule those proceedings after it failed to seat a jury. There are several other trials coming up, including class actions, as lawyers pursue a suit on behalf of 350,000 corn growers claiming as much as $13 billion in losses. This is the twist, though. Listen to this. This is the twist. In the twist, the lawsuit spurred by the Chinese action comes as, guess what, folks? State-owned China National Chemical Corporation is buying Syngenta at $43 billion. So Syngenta is a Switzerland-based company, and of course what that just means is that they're doing all the business out of there, lower taxes. So the thing is amazing. They make GMOs in a huge way. The GMOs, and the way this works, and this has already been in court, unfortunately, is that if it goes from one field to another field, bottom line is that you got to get them out of the other field. Bottom line, the corn seed was GMO. China didn't want it at that point. That's what they're suing about. Now, guess what? Now China's going to own the whole business. So that is a twisted scene, and you know, we'll see where that whole thing ends up shaking out. But if we get open, we take a look at the Asian markets. When we open back up over in Asia tonight, what you're going to see is that the Nikkei right now, Nikkei last night was down 0.2%. We're at 14,358. Now, the Nikkei has to get under 14,128 to get to lower price. The FTSE in the UK, bottom line, that thing is holding up. You know, wasn't much movement out there today, down 21 bucks. You know, this market all around is pretty Teflon. The DAX in Germany, that was closed out here today. That was up 158 bucks on Friday. We are at 12,822. We go up and we take a look at the Canadian market. The comp up in Canada, that was down 32 bucks out here today. I kind of like how this one looks. So this one out here today, this is certainly not at highs. The highs for the last 6 months is up at 15,900. But the way this is looking out here, this thing wants a slightly higher price. We closed at 15,405. This looks like it wants to make a run at 15,550 level. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. Go have a blast with it. Look forward to speaking right back here tomorrow morning, 9 o'clock. Wow! Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.